Hello guys, welcome back to another video, and today's video we're going over the current market situation and what's happening for this week. It's like a weekly outlook on the market. I've actually got a flight at 8 o'clock tomorrow morning in the UK time. It's currently 10:35 PM at recording this video, so I just wanted to quickly hop on the charts and do a quick rundown. I won't be trading really at all this week because I'm going away for a few days, which would be nice. And yeah, but anyway, going into the charts, we've seen S&P really today with a lot of upwards movement, a lot of risk on sentiment actually, a lot of optimal, we got a lot of risk on sentiment from investors, a lot of optimism in the market. We saw this reversal pattern, very clean reversal pattern on the S&P, on the 4-hour head and shoulders pattern. We saw a break, really clean break to the upside, getting rid of all this resistance in the way, and now it looks like we're heading all the way up to all-time highs, which is pretty mental. This bounce back, I didn't really predict it myself. I didn't think we would see this sort of optimism in the market from investors, but I'm pleasantly surprised. Of course, this is a good thing for the market. And the big headline coming in at 2:48 today, PM UK time. It's about 9:48 US Eastern time. Iranian officials are studying abandoning uranium enrichment as a US condition for ending the war. Why did this cause US dollar to drop? Why did this cause S&P to rise? Why did this cause oil to drop, right? Well, the whole point of the war, the Iran war, was about nuclear weapons. Well, one of the main points, right? And if the Iranians have come out and say we're actually slowing down one of the main materials that makes nuclear weapons, then that's going to make the US, Trump, Israel, all these people a lot more happier, because that's why they got into the war in the first place. So this is signs of de-escalation in the market and in the war, right? So the dollar's going to drop because the dollar is a risk-off asset, not a risk-on asset, right? So when there's signs of de-escalation, there's signs that actually interest rates may hold or lower, because inflation may not continue to increase, because there could be signs of de-escalation. People are going to put their money on risk-on assets like the S&P, and oil is going to fall because there may be signs of the Strait of Hormuz opening, right? So more supply could be heading through the Strait of Hormuz, more boats and ships, because Trump's also saying that he is going to barricade the Strait of Hormuz, and that's going to make that could, with his allies, allow more supply to go through. Of course, if this actually happens in the end, we don't really know. But all we can do is study the markets and see what the market's telling us as a trader and as an investor. So this was big headlines in the story today. So there's a lot of big news. We've obviously got still quite a lot of fear, but that fear is coming back into the. There's a lot less fear in the market. So we were at extreme fear, and now we're at this fear level. So it is coming back to the neutral sign. And I'm not going to pretend and say, I think the war is going to completely end in the next week or so. Of course, that's probably not going to happen. Of course, inflation is going to stay high. We still want, we're saying there's this drop in oil, but oil is still sitting at, $98, right? That's incredibly high, and we're coming and bouncing between this area of fair value that's being created in the market. You can see this by drawing out your volume profile tool. We're near the POC, which is where the most amount of buyers and sellers were happening at the time of this move right here. So we can see we come back to fair value, but fair value is between $88 and $103. So we got to just zoom out on the charts here and say, well, this isn't normal. This is still very inflationary. This is still very interest hiking, conditions. And the longer, like I say, the longer this stays around this area, we bounce between these high and lows of fair value. We may go up here, we may go down here. This is just going to be more and more inflationary, and it's going to keep the central banks looking to hold interest rates, and if not higher them, which will strengthen some currencies. But today we had some short DXY weakness, and we may see further DXY weakness for the rest of the week because of these headlines that have come out today. So if you look at the DXY, bang, We rose higher. Why? Because the US were blockading, possibly blockade, and now we've dropped, right? So because of risk on sentiments changing, you know, this is why it's very difficult to trade at the moment, because yes, it's quite easy to understand from a fundamental point, but the risk sentiment's changing on the daily. So, you know, when you're in a swing trader like me, I need to understand trends, and I need to be trading trends. I don't want to be trading the US dollar right now, you know, because the trend changes every day. So you just got to be a little bit careful getting into these positions here. You know, I've seen people wanting to short, you know, into the USD. You know, that hasn't been a good trade, because you're playing with fire here. You're playing with a DXY which is bouncing up and down. So you're never going to see this trending market that you want to be seeing, like you were seeing in this clear risk-off environment when the DXY was strengthening, right? But now we're struggling. You know, risk sentiment's changing. You know, we're weakening here. We're finding a bit of strength again, and we're weakening again, and we don't really know where the trend's going to go. So I'd advise people, if they want to short NZD/USD by buying the dollar, right? If you want to short NZD/USD, you're shorting the New Zealand dollar and you're buying the US dollar, then you want to be hedging yourself, right? You want to be maybe looking at possible gold longs. You know, I was saying this morning, and gold's been a good entry right here for people. So that's something I would be advising people in this current week. You know, you got to be putting yourself on both sides of the market for both outcomes. You know, yes, from my point of view, I'm seeing risk on investor sentiment this week, but next week we could see a completely different picture. Tomorrow we could see a different picture. So trying to put yourself in a trending market for the next week or two is going to be very, very difficult to do. So just make sure you're on your toes here. In terms of forex, there's not much I'm really looking at again, because I'm struggling to see trending markets really. We got a breakout here to pound USD because of this dollar weakness, but then do I want to buy the pound, you know, against the US dollar? Not really, you know. It's a tricky one, but we have obviously got a very nice area here which you've broken out. So the entry would be a break to the upside, a retest here, and a setup to the upside. We've also got now a US dollar which could save this Japanese yen here, which is near this intervention level. Luckily, we're holding very strong resistance at these highs here, at sort of the 160 area, which is exactly the area of intervention which could be happening, where the Bank of Japan could be intervening and you know, buying a lot of yen and selling a lot of dollar, you know, to push this market back down, you know, and then we can catch some amazing trends going into maybe next year, or the end of this year, where we find support here, and we look for some really nice upward trend trading, you know, across all JPY pairs, right? This would be a beautiful conditions for us. This is exactly what happened 2 years ago. This is exactly what happened, 2024, 2 years ago, and we had this intervention happen, and we saw these beautiful trend trading times where you could trade to the downside for a lot of period, and then we had this beautiful up momentum for the last year, right? So nice opportunities in the market here, which could be with the Japanese yen, but look, like, these markets are, they're difficult to find pullbacks. The ones that are really skyrocketing are going, but we're not seeing the retracements because of that's what you sort of get in these times, right? You see a lot of strength, you sort of see a lot of large moves, but you don't see nice structural trends, and that's one of the big issues with the market at the moment. So my main thesis going into this week as a swing trader would be look to hedge positions on the US dollar. If you want to buy the US dollar, make sure you're longing the stock market, you're longing gold, you know. If you want to buy a risk off pair, you know, maybe, you know, buy a risk on. It sounds stupid, but in this conditions, that's what you've got to do to preserve your capital, right? So yeah, that would be my opinion going into the week. Hope you guys have enjoyed the video. Hopefully it wasn't too waffly or long. If you have, smash the like button, subscribe, and I'll see you in the next one. But thank you.